I'm Charlotte McLeod with investingnews.com, and here today with me is Brien Lundin, editor of Gold Newsletter and host of the New Orleans Investment Conference. Thank you so much for being here. Always great to have you.
Hey, Charlotte, always great to be with you. Thank you so much for the opportunity.
Really good to be catching up with you. I think we've got a lot to go through today. I thought, as usual, we would start with gold. And we're catching up from our conversation all the way back in March, which actually, it's not too long ago, but there's been so much that's happened since then. Back then, we were still talking about gold getting to 3,000, which you said, of course, we could easily get there, and we did see that and beyond. So I want to get your thoughts on how gold has been doing since that time. Of course, you saw this upward move coming, but has the speed surprised you? What are you thinking?
Well, I'm glad that when you review what we talked about last time, I was actually correct in my predictions. So thank you for bringing up the correct predictions at this point. But yeah, we did get over 3,000. And I think the big news since then, everybody would think that the big news was we hit 3,500 and fell back and are getting ready to attack that again. But I think kind of the big event, as it were, that's under the surface a bit that people are kind of overlooking is the fact that we've spent so much time now over $3,000 and are going higher apparently, that investors in junior mining in particular have kind of grown accustomed to the fact that gold is over $3,000. They're no longer looking over their shoulders, waiting for the market, Mr. Slammy, to all of a sudden come in and knock gold down back where it started, which was our experience over the previous nearly 5 years. So we're used to it now. We're comfortable with the fact that gold's over $3,000, whether it goes up or down $100 or a couple $100. We're still in a very good place as far as the gold price goes. The majors are making money hand over fist. Their pockets are about to break with the amount of money that they're putting into it. And it's all filtering down into the juniors now. So there's a very positive attitude that I see. Anecdotally, this summer, we just didn't slow down in the junior market in terms of financing. So prices kind of went sideways along with the metals prices during the typical summer doldrums. But companies that were raising money during the summer usually were able to fill their book very easily and on terms that they really wanted. So I think it's all setting up for a great fall for the metals and the miners.
Well, this is all really good to hear and a great place to start the conversation. Looking a little bit more at the gold price, are you seeing that 3,000 level as a new point of support for gold?
Yeah, absolutely. I think it's a strong support. I do think we're crawling ahead or creeping ahead, and that next big target of 3,500 will be put behind us over the next couple of months, I believe, going into the fall. So I do think, that's the big support now. I think, likewise, we have big support for silver at $35. And, when you put those two together and you have a new era for the metals, for the monetary metals that, just a year ago, would have been unimaginable, virtually unimaginable. The ardent gold bugs and silver bugs among us certainly imagined it, but it was not a widespread feeling that we would be where we are right now.
Right. Things are definitely changing in a positive direction for gold as well as silver, which we'll make sure to get into a little bit later. I want to make sure to touch on what is driving the gold price with you. And I know for you, when you're looking at it, top of mind is always the debt issue. And very timely, I saw just this week a headline saying that U.S. debt has gotten to 37 trillion, and it's happened much, much sooner than was originally anticipated. I feel like when we have these conversations, I ask you all the time, okay, what is going to be the tipping point here? So any updated thoughts on what you're seeing there?
Yeah, I don't know what the actual tipping point will be. It may be in whatever crisis is the next one that gets bailed out by the Federal Reserve and the other central banks, or it may be the bubble after that one that bursts. And by, the breaking point, I mean, when the public looks at currencies as having very little credibility or value, and just knowing that the next cycle is going to turn and there's going to be so much more currency created. I don't know when that's going to come, but the thing is, we have to recognize the trend. And the trend of ever easier money over decades and decades, really going back to even the 1960s, and ever greater debts created, both sovereign debts, U.S. federal debt, and individual and corporate debt. Those debts can't be serviced at current interest rates. The interest rates have to be below the rate of inflation. So that's, a negative real rate environment going forward as long as this monetary regime is in place. So that's the big driver. And that has been driving central bank buying, both the debt situation and the dollar weaponization that we saw beginning in 2022 has driven central banks to diversify into gold, really at the sake of the dollar and at the sake of the euro. Gold has surpassed the euro in central bank holdings and is now taking aim on the dollar. So that's the trend, and that's going to continue. Now, at the present point in time, we've seen central banks start to pull back a little bit from their record levels of gold purchases. Not a lot. They're still far above where they were pre-2022, but they pulled back from the records set over the last couple of years. They're still buying, just quite not as eagerly as they were before, becoming just a bit price conscious. But I think that central bank buying will continue at a fairly steady pace that will continue to support the market. What's shifting now is that the market is getting back to Fed talk and trying to interpret what Fed policy is going to be. The big thing is, are we going to have a Fed rate cut in September? It's very likely that we will. And that's what the market is starting to look forward. And that's what is bringing Western investors into the sector, into gold. But I think largely into silver and mining stocks as a way to play the move in gold.
Right. Definitely. I think we're seeing that shift over to what's going to be happening at the Fed. So thanks for going into your thoughts there. Another kind of recent related headline that I wanted to mention to you and get your thoughts is last week or so, there was that article that came out from a Fed economist looking at gold revaluation. And there seemed to be some excitement in our sector where people were saying, well, it's not saying that this is going to happen, but it's a bit significant that the Fed is even publishing something on this note. So anything that you would note there?
Yeah, it's been widely talked about actually virtually since Trump got into office. I think it's would be great and positive. It would create a bit of a floor under the gold price. I don't think it would restrain the gold price in any way. I don't believe it would be a real, impactful driver for the gold market going forward. But it would enable the Fed to use that asset now and the Treasury to use that asset actually on its balance sheet to create even more debt. So that, I think, is probably the big driver for gold coming out of that. I don't think it's much more than an official recognition of the real world and the way the world has been for decades.
And so you mentioned going forward, we're going to get back into this focus on the Fed. For you, does that mean all this tariff talk is a little bit in the rearview window, at least when it comes to gold? How are you seeing that?
Yeah, I think it is. We had, as we talked, we had a bit of a whirlwind in gold, up, down, and back up and back down again as the rumors swirled, the assumption that there was a tariff on Swiss gold imports, then the assumption that there wasn't, and then confusion. But I think that's really been put to bed by that social media post by President Trump saying that there will be no tariff on gold. So that's kind of behind us. The end result, though, is that there's an awful lot of gold in COMEX vaults in the meantime. Interestingly, though, that gold is not being mobilized or not being allowed to be delivered. And we still see it off and on that gold lease rates are going up, meaning that there's still tightness in the market. So I think we're set up very well, but I don't think we have quite that danger of a gold supply squeeze that we had worried about a few months back.
Yeah, it does seem like it's been a little bit put to bed, although of course things can change very quickly. So we'll continue to watch how that plays out. Of course, want to take a look at the companies as well in the gold sector. So you're mentioning some of the big companies, they are putting out these good results. They're starting to get some recognition in the market. And the next step is to see that filter down the food chain. So I'm wondering, when it comes to the gold stocks, where is your focus right now? What types of companies are you most excited about?
Yeah, I would say there are three areas that I'm focused on right now. One is the companies that have large resources that are valued in some cases as low as $10 an ounce in the ground. The market really has not been efficient enough to reprice those appropriately as yet. So I think there's big potential in those kinds of companies, including in that a subset of that being those companies that used to be regarded as optionality plays, waiting for a higher gold price. All of those plays at this point are robustly economic. So the market has yet to reflect that. Another thing I really like are silver plays, silver juniors, because silver offers natural leverage to gold in every long-standing gold bull market, and it's just starting to fulfill that role now. As I mentioned, we just broke out not too long ago above that key $35 level. So I think silver's headed directly for $40 as we speak, and silver offers that leverage to gold, but the silver juniors offer leverage to silver. So they can truly be explosive investments in this kind of an environment. And so I really like that sector. And thirdly, as I referred to earlier, these junior companies have been able to raise money. So there's a lot of drilling going on, throughout North America especially, but really even around the world. There's a lot of news flow. And so there are some exploration plays out there that I'm very excited about. And, as much as I like the optionality plays, the large resource plays, the silver stocks, I can't resist a good exploration story. So I'm invested in a bunch of those and follow a bunch of those in Gold Newsletter.
All right, so that's three areas that we can look at for opportunities in gold and silver stocks. I want to talk a little bit more about silver. So you mentioned we've seen silver on the move. We got through 35. We even got past 39 earlier this year and approaching that $40 level. And I'm wondering, so you see it continuing to go higher. What do you see as the drivers? I remember from previous conversations, you are not looking quite so much at the industrial side for silver. So what is driving this move right now?
Yeah, I have never given much credence to the industrial argument, industrial demand argument for silver. Because if silver was valued purely as an industrial metal, my feeling is it would be much lower, under $10, maybe even under $5 an ounce. So most of its value is monetary. Now, that said, we have gotten to the point with surging silver demand for solar cells and other industrial usage that within the next 5 years or so, every newly mined ounce of silver will be taken off the market for industrial usage. Now, that isn't necessarily a driver of the price at the margin, but what it does do is it takes supply off of the table. I still think that monetary demand, that monetary cachet in history that silver has had over millennia, will be the price driver, will be the source of the majority of demand for silver. But if there are supplies that are taken off the market, if there are really no new supplies coming to the market, then whatever overhang in supply overhang that's previously existing, has to fulfill that monetary demand. So I think that it's coming to a supply crunch that, combined with what I see as growing monetary demand for silver, is going to really be a big driver going forward.
Well, that would definitely be very exciting to see, and always love to get your thoughts on the precious metals. But I want to make sure we bring up copper as well, because that's another one that we've spoken about before. And there's been quite some excitement, I think, maybe less so now, but ahead of the tariff announcement, where we had Trump doing the Section 232 investigation on copper. We had the results of that and saw some of that excitement come off. For you, when you look at that, what do those copper tariffs that have been introduced only on some products, what impact does that have on the market?
Well, it tightens the market, and that actually ends up helping the price, because it's not going to, typically a tariff, if you tax something, you get less of it. So you put a tariff on any product, it should lessen the demand for that product. Well, that won't work with copper, because there's no adequate substitute for copper. You can't innovate around copper. And the demand for copper, for fundamental reasons, base case demand that we already have in industry and electrical generation, added to that, you have the electrification of transportation, the electric vehicles, you have the rebuilding of the grid, and now you have the AI data centers. About 5%, a little more than 5% of the capital expense of any AI data center is purely for copper, just for the metal. So these demand sources are not going to go away. And copper, if it would double in price, still would not have an impact on lessening these sources of demand. So any other restrictions you put on copper supplies are only going to fuel further price gains, because that demand curve is truly among the steepest that we've ever seen in the history of commodity investing.
And from an investment perspective, I think people are looking at what's going on there in copper, and they're wondering, okay, so what does this mean? How should I approach it? Should I look more closely at US focused copper producers? Does it matter less because the copper ore isn't included in the tariff? Any thoughts on how you're approaching copper right now?
Yeah, a good point. The big copper producers are not yet really, I mean, they are benefiting from higher copper prices, but we haven't yet seen the kind of reaction in the copper price that I'm expecting to happen. So yeah, they are somewhat leveraged, but they're such large companies that I don't think you get as much torque as in the copper developers and exploration companies that benefit from that overall positive bullish sentiment on copper plays. So there are a few out there. It's not as rich of a field to plow as you have for, say, gold or even silver. But there are some copper exploration stocks out there that we follow in Gold Newsletter that I'm very excited about, and in trying to get positions in personally as well. So it's not as easy. It's not like shooting fish in a barrel, which I think is the gold market, the gold junior market is kind of becoming right now. But there are a few select ones out there that I think are very well positioned for the future. Right. So doable, but it takes a little bit more thought and research. Yeah. Yeah. Well, we've covered quite a bit of ground today, gold, silver, and copper. But before I let you go, I want to make sure to talk about the New Orleans Investment Conference. It's coming up at the beginning of November, and get your thoughts. What are you most excited about this year? What would you highlight for investors? Yeah, well, history has shown over the 50 years of this event that when there is a metals and mining bull market, New Orleans is the place to be. I mean, we have the top experts on the metals, on the miners. We have the top mining opportunities there in our exhibit hall, the smartest companies out there, because the audience is so highly qualified and selective and smart that the smart companies want to be in front of those investors. But we've also got the experts as usual on geopolitics, on macroeconomics, on every market segment, all coming together in one place and in an extremely fun and entertaining place to be, but with a crowd that is of like minds and very willing to share their best ideas as well. So we've got another blockbuster. That's the environment, being in a gold and silver and mining stock bull market. You really can't afford to miss New Orleans, but we're going to have a really exceptional speaker roster once again. Just looking at the list in front of me, we've got Brent Johnson, Adrian Day, Adam Taggart, Alex Green, Danielle DiMartino Booth, Dave Collum, George Gammon, Jim Bianco, Jim Iorio, Jordan Roy Byrne, Lawrence Lepard, Matt Taibbi, Peter Bookvar, Peter Schiff, Peter St. Ange, Rick Rule. It goes on and on. Tabby Costa's appearing virtually. It's just, and we're adding more. I can tell you right now, we have some very exciting speakers we're about to add. So it is really the place to be. And I would recommend that any serious investor in this sector really needs to go to our website, neworleansconference.com, and take a look at this lineup. It's really spectacular.
Definitely very, very stacked lineup. I'm really looking forward to it. And we will have a link in the video description for people to go check it out. I know you can't possibly list all of the different speakers and companies attending, so it will be down there. And I will let you go unless you had any final thoughts that you would want to leave investors with right now.
Well, the final thought, I think, is the same as the last time we talked. This is an opportunity. I call it a generational opportunity because it's been a generation since we had one similar, the early 2000s. And that was a period of extraordinary wealth creation. But this time it's even easier because we already have gold at record heights and going higher. But the metals, the miners and silver have lagged. So the opportunity is still as if we were at the very early stages, with the hard part already being done for us, that getting gold going. So really an extraordinary opportunity. And I think people have to look at it as such, as something we're not going to see for a long time coming. And I think this one is going to, this opportunity, this bull market's going to last a good long time as well. So get positioned. It's going to be a really fun ride.
Well, perfect way to sum it up. Thank you so much for coming on to go over what's happening, and looking forward to seeing you in person in just a couple of months.
Thank you. Same here, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Brien Lundin.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.